In a stunning display of strength, Ethereum has just smashed through its previous all-time high, a critical resistance level that capped the market for over a year. The breakout was powerful, igniting the entire crypto market and painting screens green across the board. The move was decisive, triggering a massive short squeeze that liquidated billions in bearish bets. Traders who bet against the market were forced to buy back in, adding rocket fuel to the rally and flooding the space with unshakable optimism. The real catalyst? A shockwave from traditional finance. Against all expectations, Fed Chair Jerome Powell delivered an unexpectedly dovish pivot at the Jackson Hole Symposium. Instead of hawkish talk, Powell signaled a clear shift toward potential rate cuts, implying cheaper money ahead and sending every market, especially crypto, soaring. Bitcoin is surging, but it's Ethereum that's truly leading the charge. Fueled by deflationary pressure from recent network upgrades and a booming ecosystem, its volume and momentum are at full throttle. This isn't just a weekend pump. It feels like the start of a new, sustained rally. For those who held through the brutal bear market, this is pure validation. After months of doubt and seeing red portfolios, their conviction is finally paying off in a big way. It's a combination of crypto's technological progress and a newly dovish Fed, creating the perfect storm for a historic run. The fear that gripped the market for months is gone, replaced by widespread excitement, FOMO, and a healthy dose of greed. The narrative has flipped. Buckle up. Things are just getting started. At the highly anticipated Jackson Hole Summit, where markets braced for a hawkish stance, Fed Chair Jerome Powell completely flipped the script after months of tight monetary policy. He signaled that the battle against inflation was progressing well, opening the door for interest rate cuts much sooner than expected. So, why is this a seismic shift for crypto? When interest rates fall, the returns on traditionally safe assets like government bonds become far less appealing. This forces investors to seek higher yields by moving capital up the risk curve, away from safety and towards growth. And at the far end of that curve, crypto, with its potential for explosive, asymmetric gains, becomes a prime destination for that capital. We saw the exact opposite play out in 2022, when aggressive rate hikes pulled liquidity from the system and sent crypto into a brutal bear market. Now the Fed's pivot is a massive green light for risk-on assets. Institutional investors who manage trillions of dollars watch these macro signals like hawks. A dovish Fed isn't just commentary, it's their clear and actionable cue to deploy capital. This shift means a torrent of liquidity is poised to flood back into Bitcoin, the market's bellwether, then cascade into Ethereum, the backbone of DeFi and Web3, and ultimately lift the broader altcoin market. The environment is turning favorable for explosive growth. Powell's speech wasn't just words, it was the starting gun for the next bull run. The floodgates are opening. On the surface, this rally feels familiar, with echoes of the same breathless excitement from 2021. But look closer. Today's market is fundamentally stronger, more mature, and far more resilient. Back then, the market was a frenzy, fueled by retail speculation and social media hype. Now, institutional capital is the game changer. This isn't just more money, it's patient, strategic capital, bringing a new level of stability. The floodgates truly opened with spot Bitcoin and Ethereum ETFs. These regulated products act as a secure, familiar bridge, unlocking trillions in managed capital from giants like BlackRock and Fidelity. This means an influx of long-term, sticky funds from sophisticated investors, which helps to dampen volatility compared to fleeting retail FOMO. Crucially, regulatory clarity is emerging worldwide. For years, ambiguity was a major barrier. Frameworks like the EU's MiCA now give institutions the clear rulebook they need to confidently invest. The underlying technology is also far more mature. Ethereum's ecosystem is robust, with proven real-world utility and a thriving network of efficient Layer 2 scaling solutions now fully operational. The narrative has shifted from pure speculation to building sustainable infrastructure. This powerful combination of institutional legitimacy, clear rules, and tech maturity makes this rally far more sustainable. This is a new era. Ethereum's breakout above $5,000 fueled by steady ETF inflows turbocharged by Powell's dovish pivot. Unlike Bitcoin ETFs, ETH ETFs have seen consistent positive inflows creating a supply shock. Institutions are buying ETH daily, locking it up and squeezing supply with much ETH staked and less on exchanges. Price pressure is up. Price discovery is here. Conservative targets $6,500, $7,000, $8,000, $10,000 possible if momentum continues. Watch ETF inflows. Watch staked ETH. Ethereum's yield from staking deflationary tokenomics make it a top pick for big investors. The setup is bullish in this new macro environment. The rally has legs. Ethereum's surge is just the start. Capital's rotating fast. After Bitcoin and Ethereum, Solana is the big winner, smashing resistance and eyeing new highs. Institutional interest in Solana is growing, with ETF rumors swirling. If a Solana ETF launches, expect explosive price action. Altcoins are waking up. Liquidity is returning. Meme coins are rallying. XRP is also moving. Litecoin is also moving, buoyed by legal clarity and market momentum. Diversification is key, but so is caution. Volatility rises as capital flows into smaller coins. Watch Bitcoin dominance. As it drops, alt season heats up. For now, large caps like Solana lead. The whole ecosystem is coming alive. The party is just beginning. Beyond price action, global crypto adoption is accelerating. The EU's MiCA regulations, digital euro plans are setting the pace. Nation-states are quietly adding Bitcoin to reserves. This is a macro shift in how countries view money. The Fed's dovish pivot, institutional inflows, and regulatory clarity create a powerful setup for higher prices. We're in the middle innings of a major bull cycle, not the end. But risk management matters. Volatility and pullbacks are inevitable. Have a plan, set profit targets, and avoid FOMO at the top. Consider rotating profits into lagging large caps like Solana. Stay informed, stay invested, and manage your risk. This is the opportunity we've been waiting for. Want to stay informed? Subscribe so you don't miss anything.